What's going on, everyone? Welcome back to Smart Money Sundays. Hope you're doing well and excited for another week in the markets as we are. Let's go ahead and hop right into it. Euro USD, obviously, we had that thrust up at the beginning of last week into our initial point of interest. We did run a little bit higher, but this area obviously was that initial POI, this being the secondary. And we had a significant push higher and then kind of a railroad and price action back down to the downside with this high volume candlestick in here. All right, and so I'm kind of looking at retracements for continuations with the overall trend. I'm certainly not looking at this as a low in this market, in this enduring downtrend that we've been seeing for quite some time. I'm just kind of looking at this wick here, this inefficiency, as initial targets, and then obviously the old low as kind of running out the liquidity beneath that as the primary overall objective. All right, but in terms of the here and now, I'd simply like to see us retrace. Obviously, here's where that up close started last London session Monday morning. All right, that push higher, demand fails, trade into this up close, flips to supply, right? And so looking at this as the beginning of that institutional volume, and then potentially, could trade a little bit higher up into here as kind of an extreme point of interest, but I'm certainly looking at continuations lower, again, down into this inefficiency or into the old low. If you're risky, you could even catch something like this for a quick scalp up higher. Again, that's risky and counter trend, but we'd certainly like to see some premium to continue to look to sell this thing. All right, so that's EU. GBP USD is another one. We wanted to trade up into that 90-minute supply, right up into here. We never did get that. This was about as high as we went last week. And you can look at this as kind of a fib move. If you fib that, you can see that we traded nicely into the kind of 61.8 right here. I'm looking at kind of the negative 27 as targets before we might then see an overall retracement up into that 90-minute. All right, and so looking at continuations lower, and then we'll reassess as we hit that negative 27, for a kind of higher time frame potential reversal, or at least higher time frame retracement up into the supply that has not been accounted for, running out this descending liquidity here. But if you zoom out to the higher time frame, which hopefully you do on the weekends, look at kind of top-down analysis, you will see that we have now run out the old low from COVID, from March of 2020. That has now been run out. Doesn't mean we're immediately going to reverse, right? I still think that we can dig a little deeper into that negative 27, right? But then we'd be at significant discount below an old low to where we might actually see a significant push to the upside thereafter. All right, I just don't think we're quite ready for that yet. This is certainly not a low in the market. We should continue lower. All right. But of course, if we simply just open up and push higher as we did last week, then we should treat these retracements as excuses to continue to sell with this overall momentum. All right. So that's GU. That somewhat falls into alignment with EU. All right. AUD USD. Is another one that we gave out perfectly on the live session last week, last Saturday, as well as on my Smart Money Sundays, gave out this level to the T. And as you can see, as that was met, that's when the significant price action came into the market. So that was called to pretty much perfection. So congratulations if you caught that free setup that was given out last week. Really, really nice trade. Right, but again, in terms of the here and now, we have run out again. Old low here on the higher time frame, hence why we've kind of retreated. Doesn't mean we're going to overall reverse immediately just because we've run out an old low. In fact, I think we can trade deeper into this inefficiency here at 6,600. Right, and so then with that objective in mind, we can then have some more confidence behind selling retracements into that objective. And for me, that's going to be looking at this kind of 1 hour candlestick where we had that, obviously, the sell-off, the kind of pause in the market and the continuation. So this up close running out this intermediate high as the initial point of interest, and then obviously the overall supply here that was created, this buy to sell, that ran out relative equal highs, ran out this high and these highs, right? So that kind of sell to buy to sell. So that would be the extreme POI for continuations. All right, but pretty clean narrative here on AU as well. Falls into alignment with everything else that we're looking at on these dollar pairs. All right, USD CAD, another one that I gave out to you guys 2 weeks in a row, right? Talking about this 8-hour level. We got that to the T in a massive bullish expansionary move. Congratulations if you caught that as well. Ran out the old high. Right, but if you look at this from a higher time frame perspective, I think that we can at least trade up into the supply. If not higher time frame, you can see we have relative equal highs up here as an ultimate potential draw on liquidity. All right, so we could have a significant ways to go here on the dollar for dollar strength. But at least short-term, medium-term target should be this kind of supply where we, kind of traded into demand, had that reaction, demand failed, we broke lower. So I think we can dig up into 1.3500 as overall objectives for the medium term. All right, and so that brings us into just simply following this lower time frame structure, hop down to somewhat lower time frame. Obviously, higher low, higher high, higher low, higher high. Naturally, we should be looking for the retracements and continuations, just like we are on all the pairs that we've already discussed. Right? So if we can dig down into here, naturally that would be the next kind of point of call for continuation, simply following this wave play. Right? So higher high, higher low, higher high, higher low, continuations up into that 1.3500. That would be fantastic. All right, but momentum is significantly strong at the moment. We could simply trade into kind of this consolidation here and just continue up into that objective. All right, that could happen as well. That's why we need to be able to react and adapt and understand how to implement time and price within our trading execution, which we teach in depth in our courses for our mentorship students. All right, but that's the narrative on UCAD. Hopefully you're kind of seeing a theme and a pattern here on these dollar pairs. All right, NZD USD, really the same deal. Simply looking for those continuations. New lower low in the market. Should naturally look for retracements to create that lower high. First point of interest, obviously the daily up close candle here at 6080, and then potentially pushing a little bit higher into this kind of overall supply up into here as the extreme POI, somewhat like AUD USD. All right, so retracements, continuations. Until structure breaks and price tells us otherwise, we should continue trading with that momentum, with that trend, or else if you're only going to be looking for reversals, you're going to miss out on a lot of money. All right, Swissy, another one, dollar strength, again, is what we're looking at. Had that consolidation, ran the high, ran the low, higher high, right? So I kind of like this model here. Simply looking at this demand now as a potential area of interest for continuations. Now, I still do like this level, and I think it's still on the table here. So if we do get a significant sell-off and we do run out this intermediate low, then this would naturally be the next level to look for longs, right? Look for continuation. So we have these two levels. We have the bias, we have the narrative. If you lose this one, you take this one, you make the loss back and more, trading up higher into this pool of liquidity, resting above these highs. Okay, so that's Swissy. Clean levels on that one. USD JPY. Obviously, these yen pairs have been on a massive tear to the upside. We do have descending relative equal highs here, so that'll be the draw on liquidity. This in a massive uptrend, this will not be the high in the market. Doesn't mean we can't run out lows first. So, I will caution, oftentimes when you have equal highs like this, I've seen in my experience that they'll run the lows out first. So that's certainly on the cards, running out kind of this most recent low, trading into maybe something like this. All right, so mark this level off, 140.8. Doesn't mean we need to rule out this level. Very well could trade into this level, this kind of mitigation train here. 15-minute, 30-minute down close candle, right? For continuations targeting these highs as the draw on liquidity. All right, so this is the first point of interest, obviously this being the second point of interest. but we have conviction behind continuations, buying retracements because of this draw in liquidity here. All right, so hopefully that's pretty succinct, straightforward for you. CHF, JPY, kind of same deal, right? We're seeing a little bit of an ABC retracement on these yen pairs, obviously after being so overextended to the upside, but momentum is still strong. Seeing that retracement, right? So A into B into C, that negative 27 aligns with this area of manipulation here to the left, right? And so this might be a nice level to mark off and look for kind of lower time frame, time and price, right? Maybe see that kind of sell to buy, break structure, then we take it on the pullback continuations with overall momentum. Other than that, I really don't see anything else that price might potentially play off of. This is pretty low resistance liquidity run here, so there's nothing much to kind of stop it once we actually do decide to go bearish. All right, so that's the level 147.8 on Swiss franc JPY. CAD JPY, okay, seeing somewhat of a retracement on this one as well. Again, the yen pairs, I don't think these markets are done. Still looking at this as simply a retracement for continuations. We have traded now into an old high in market structure, right? Trading into that, but I think we can probably run that again, right? Make one more potential pass on that low, on previous week's low, and trade into something like this, right? As the initial POI, and then I have a secondary POI in this area as well. The 12-hour time frame. All right, so just looking at this as expansion, retracement, POI1, POI2, continuation. We are looking like we're trading into that 50 EMA as dynamic support. All right, so pretty simple, straightforward on that one as well. Euro NZD. You guys will notice that the theme is on these episodes is literally almost always looking for retracements for continuation trades with the trend. All right, we're very rarely trying to call out reversals here. I don't know if you've picked up on that, but it's because continuations are much higher probable, and the cliche term, the trend is your friend, but it's true, right? You're gonna drive yourself crazy trying to catch reversals when you should simply be trading with the overall momentum until trend actually breaks and price tells you otherwise. Then you can trade reversals. Don't try to catch a top or a bottom in the market. You won't do yourself any favors. All right, Euro NZD, I expect price to trade in terms of an initial POI. Obviously, we're really just cleanly waving to the upside, just lower time frame retracements, lots of momentum, NZD weakness, but I expect us to trade at least into this supply here at 6875. Right, so simply looking at trading this lower time frame price action. Right, and so naturally, for me, that's going to be kind of this 30-minute down close here. And we could run this and trade it into these kind of this consolidation, these wicks. But again, the logic is there, right? Simply looking at retracements here, relative equal highs, retracements. This is the trading range here, right? Higher low, higher high. So we could very well trade deeper into here and continue, right? But I'd just simply like this down close candle, right? So maybe we'll push up, trade into the down close, and then push higher. Right, but again, looking for retracements, lower time frame for continuations with the higher time frame momentum, which is significant to the upside. All right, GBP CAD, another level that was handed out, given out to you guys. Right, this up close candle that traded into supply, ran descending liquidity here, buy to sell. Nice clean equal lows. That level was talked about on last week's episode as well as the previous week's episode. Ran out this short-term high. Right, and then we have that reaction. Now, I still think there's a possibility we've run out this low and reacted, kind of railroaded. I still think there's a possibility we dig deeper into this supply, but ultimately we have the clean equal lows as the draw on liquidity, which should give us confidence and conviction behind pushes higher as simply retracements for continuations into these lows. All right, so we could kind of take 50% of this candle, all right, 50%, or simply the hourly inefficiency full fill. All right, you can see the full fill here lines up probably with the 50% of the up close. We could certainly make one more kind of pass to the highs before seeing that sell off into these equal lows, right? Pretty clean trade from last week. Hope you caught that. Right, Euro AUD is very similar to Euro NZD, right? Simply looking to follow the lower time frame trend and structure, right? And so for me, that would simply be, right, higher high, higher low, higher high, looking for that retracement, okay? Down close candle, 4-hour 50 EMA, discount continuation, right? And we have to continue to trade this type of price action, right? And you'll make a lot of money doing that, and ultimately you will lose, right, when that lower time frame breaks and we trade into a higher time frame. We have that higher time frame retracement, right? So if that's the case, then we have that 1 hour down close candle from that we talked about last week down into here. Clean looking down close that was never mitigated, never accounted for. That happened at a London Open, sell to buy. All right, and that brings us into 1.4480. So this is the higher time frame level. This is the lower time frame level. All right, last two, 80 CAD. All right, we have liquidity, ascending liquidity here. We're in a significant downtrend. This is not a low in the market within this enduring trend. Obviously, we have the up close, significant sell-off here, right? Imbalance, inefficient move. But that up close obviously ran out equal highs, clean equal highs that were engineered, buy to sell. Simply seeing that law of effort retracement, right? You can see how long it took to sell off and then how much longer it's taking to retrace. Right, so we're trading into that now. We very well could do something like this where we make one final push, kind of buy to sell, right? Ultimately, this low being the overall target. Right, but simply following that trend, that momentum. And the same kind of applies to NZD CAD, right? This is just looking at this is simply not a low in the market. This is what always helps me in my analysis, guys. I look at something within a trend and I ask myself, is this a low in the market, right? These equal lows, is this a low in this market, in this trend? And the answer is absolutely not. So we should simply look at pushes higher as excuse for premium to continue to sell with the trend. And there's really not much here. I don't really like this kind of up close because it didn't really run out liquidity. But I don't see anything else that kind of sticks out as a clean POI, right? Except for this kind of inefficiency here, right? So that's a potential, not placing limits, simply watching lower time frame price action, see if we get that buy to sell at the right time and price, tapping into this inefficiency, confirming its validity. All right, but ultimately the objective should be these lows and pushes higher, premium for retracements. All right, so that pretty much wraps it up for me for what I'm looking at coming into this week, guys. As usual, hope you enjoyed the episode and learned a lot. Make sure you mark off all these levels. If you want to learn how we execute these trades, you want to learn more about how we analyze the markets, please feel free to head over to our website, arielfxtrading.com, and book a free call with either Nate or me. And we'll be happy to kind of break things down for you and come up with a customized plan to help you reach your goals and become a fully funded six-figure trader. All right, have a great week, guys, and we'll talk to you soon.